Yeah, I definitely think in terms of the dollar, I mean, that's where the ultimate outcome is, right? So you have a couple negatives working against the dollar. Number one is the Fed is now going to more of a no raise policy. So we know when the Fed was raising rates, it was strengthening the dollar massively. As soon as they kind of toned it down a little bit, we saw the dollar pull back. Now, eventually they'll print money, but that's going to be years away, right? They're going to hold out as long as they can until the economy demands it because it's in such bad shape. But I think the other factors we have to remember with the dollar is that you also have other countries starting to look to take over that reserve currency as well.
Mhm.
And if the reserve currency starts to be, let's say in digital yuan or something else, there's a whole lot of dollars that countries around the globe hold, and we're talking trillions of dollars that they can then dump on the open market, which will also add to that negativity or downward move on the US dollar. So I do think that, again, the dollar eventually is dethroned. It's one of the reasons why eventually I do think crypto, or at least Bitcoin, becomes intriguing as a store of safety, at least a digital gold to kind of offset the dollar decline. But yeah, I mean, it's going to be the next 5 to 10 years is going to be unbelievably fascinating and kind of scary, frankly.
Mhm.
I think so. I think you're just starting to see little inklings of that. We've heard about China, buying oil in digital yuan now, and various other countries starting to speak up about how the US dollar shouldn't have the power that it does over other countries. So
Mhm.
I think that that's beginning. I don't think it's going to be a rush to the exit just yet. Usually, just like stock markets and other things, the crashes occur at the end of the move when everyone finally realizes that it's in trouble. So I think for the next few years, it's going to be a slower decline with bounces, but it will get faster and faster towards the end. And I think as if you're in the US like I am, I have to be very aware of how I diversify away from dollars. Yeah, so I'm in that camp where I do think we see some pretty dramatic downside in 2023. So just showing my SPY chart, one of the coolest things, again, talking about trend lines here, this is the all-time high on the S&P. Here's the first hit of that line. Then you hit it here, here, and you gapped above it when we got that CPI number last week, and then we sold off. And what I love about that is it's such a negative signal. When a chart opens above a technical resistance point, it has every chance to break out. And if it doesn't, that's like a double negative. That's about as bad as you can get. And we saw that reversal on the back of that CPI number. We then had the Federal Reserve the next day, and obviously the continued sell-off that we're seeing here. So that was the negative aspect here, where I think short term, this has to be looked at as a major top. The next step is to say, okay, well, what happens in 2023? So you have to start thinking that we will see an official recession on the books. How does that affect earnings growth if the consumer really starts pulling back? I don't think that stocks have factored in the lower earnings growth or the negative earnings growth that they could see. And then you have to start to say, okay, well, if the Fed is not going to bail us out from a recession, how bad could the markets take that? And in the very least, I would not be shocked to see this long-term trend line here going back to 2016. And you could even extend this. I mean, this is what's amazing about it. We could extend this back to basically 2009.
Mhm.
And that's kind of my target for 2023. So we're looking at about 800 points on the S&P to the downside, or maybe just a little bit less, 75, 80 points. In this case of the SPY, which I'm looking at, that's about 74, 75 points. But it's a big percentage move. I mean, you're talking, 20% probably at least. I do. I think the Nasdaq, just as it always is more volatile. We've seen it obviously down more percentage wise than the S&P 500 this year, and I think you have to look at stocks like Apple, which to me, and again, maybe I'm dating myself here, but if you go back 10, 15, 20 years, I mean, a quality name like Apple that has the growth, which is very slow growth, a couple of percentage points of growth a year, those stocks used to trade at a 10 PE. That was normal. That was proper valuation. And you still have Apple trading at a 20, 25 PE ratio. So for me, knowing how big Apple is, the market cap of Apple, if it were to adjust in a really bad bear market to, let's say, a 10 PE, you're looking at significant downside in the NASDAQ because it means it basically has such a huge weighting in the NASDAQ. Yeah, so I do, and I'm a huge fan, and I've been a huge fan since basically the all-time highs of saying we need regulation in the space. More so just because you need transparency. I'm an investor, so I want, there's idealists who don't want any sort of involvement with the government in crypto. I understand that, but at the same time, if you want crypto to go up, and if you want Bitcoin to hit 100,000, 200, 250, 500, you have to have big money in there. And FTX ruined it. You could argue that Terra Luna, Celsius, Voyager, I mean, they were on that same path. But big money is not coming close in a million years to crypto again until there's transparency, until you have legitimate audit. You want the big four auditing firms to do audits. Then you'll start seeing some realization that money can flow in there. So I think that's going to be one of the key things that actually puts a bottom in for crypto. I do have it priced in. I still think Bitcoin goes lower. 9,000-ish is what I'm looking at right now. I think that is achieved by May or June of 2023. And then I think you're going to start to see a flip. With regulation, people and investors, and this will even be myself, if I'm looking at stocks and I'm saying, okay, these companies are going to earn less and less because we're in this long recession and the consumer's not spending as much. Well, where do I put my money? Well, now Bitcoin starts to look attractive. You got the transparency. It's become the digital gold. Maybe that's where I put some of my money. And I think a lot of other big firms will go that route. This is kind of, it's getting a little trickier. Last year, it was a no-brainer, right? Because Bitcoin was trading, way too high. The S&P was still near, basically at all-time highs. So that was the easy pick last year for gold. This year, it's going to be gold again, but it's getting a little trickier because I do think Bitcoin bottoms this year and has a bounce. I just think that it won't have a significant enough bounce this year to overtake the gains in gold. And I still have it priced in like gold should blow through its 2020 and 2022 highs of around 2070s to 80 this year. So we're looking at some major upside. I think 2,300 is a pretty solid target price on gold for this year. And again, the beauty of it is history is a great telltale repeater. And if you go to that mid to late 70s period, the chart is almost identical to what we're seeing in gold right now. You had this kind of mid 70s sideways to down chop like we've seen for the last 2 years in gold. And then you had the big breakout. It actually came in kind of the late 70s and gold 10x'd. So I don't think gold 10x's this time because obviously Bitcoin will take some money away from that. But I do think it's going to be probably, in the next few years, you could be looking at a 3x on gold. So I think it's part of that, right? It's there's a couple things. So it's the fact that the NASDAQ, the S&P stocks, the stock market in general, people aren't used to these long bear markets where earnings aren't going up. So there's going to be this real struggle to say, okay, well, how do we justify a rally or a long rally in the stock market when earnings growth is zero or negative for multiple years? And the answer is you can't really, right? It means generally prices have to go down aside from the occasional bounce. So then where does money go? And you say, okay, well, gold, maybe Bitcoin eventually, but gold is really going to be that safety hedge in a market where we're probably going to see elevated inflation. So 3-4% inflation, but the Fed won't be raising rates because we're going to be in a recession. And then at the same time, the Fed really tied and unable to get us out of that recession. And then lastly, I think one of the most underrated points about gold is that everyone has hated on it, right? So it's one of the most underinvested assets out there. So if you just get it to be brought back to where it was maybe 5-10 years ago in terms of investments, you're probably easily north of the all-time high on gold at this point. So I think all those things play into it. I do. I think, even though silver is somewhat of an industrial metal, which would suffer obviously in a recession period, I still think that the value of silver will increase in a elevated inflationary environment. And if I show my chart here on silver, what's really interesting about silver is you have this resistance level that you're kind of bubbling up into. But once you take that out, you really have full range to retest the recent highs here around $30. And what I love showing to people is that when you break key levels, if you go back on the chart, you have these huge mega spikes in silver where it's almost like a short squeeze in silver. And I do think that that's probably one of the things that we're coming up to in terms of that type of spike. So I think, again, what's amazing here is it's almost like a double top here on silver, right? And again, I could easily see us, maybe not in 2023, but in the next 3 years, breaking out of this consolidation phase and then actually having one of those super spikes towards the $50 level per ounce on silver. So it's exciting to see these things because the metals have been kind of like, they like no one, if you talk to like any 20-year-old who's investing, it's either crypto or, GameStop or all these, and they're forgetting about this asset class. And in an environment where you have this elevated inflation, Fed not raising rates, a dollar that's probably declining, this is the perfect recipe for one of these super spikes. So here on the GDX, and again, this is your monthly chart, but the monthly chart's nice because you actually see that consolidation pattern, right? You can almost have these two parallel trend lines that mark the highs and the lows. And notice how we were just down here and we started to move up. And now when you have this move from the low of 2020 straight up, this now becomes what we would refer to as a in spirit of bull flag. Now it's the monthly chart, so it's going to take some time, right? If we go to the daily chart and I zoom out, you can kind of see that in a different light. But basically, you have to come up and test this high end here on the GDX, which is just underneath $40. But that would be your breakout where you would get a big move to the upside. All right, so again, we have the bullish pattern on the longer time frame. Then you look at a couple things so the miners underperformed pretty dramatically gold this year because their inflation input costs were soaring and gold was not going up, right? So, I mean, think about that. Imagine you're mining gold. It's stuck at around, let's say 1,700, 1,750 was the average price in 2022, but all their costs were going up. Their equipment cost more. They had to pay their people more. So it really put a lot of pressure on the miners in 2022. Now, the key is going to be this. If I'm right and the inflation pressures come down to, let's say 3%, but just stay there, but gold starts going up 10, 15, 20%, now the gold miners are in an unbelievably sweet spot and they should actually outperform. So I think the chart is kind of telling us that something like that is on the horizon. It still may be months away, but it certainly is interesting to kind of note. And what you're seeing on the SLV is much the same, right? You have this channel, so same sort of channel. The only difference is silver is actually closer to the high end of that channel, which is intriguing because it means it's closer to a breakout, right? So it still hasn't broken out, but it's close to that breakout. Now, if we look at you said it was the SIL. Let's take a look at that. The standards global silver. Here we go. There we go. So if we look at the silver ETF, the global silver ETF, the first thing that I see on this chart is basically this downsloping trend line, right? So we put a trend line there and you can see you're still below that, but it looks to me like, again, you're kind of in that same parallel consolidation phase. And you can see that compared to silver, the silver miners have been hit much harder since this high over here. So again, I would look at this and I say, again, same kind of thing is that the silver miners may do better than silver itself, even though silver could arguably be the safer play versus the miners, right? The miners are always more volatile. So if you're going to play something, you have to be realistic and understand the extra volatility that you're aiming for when you're dealing with the miners versus the metal itself. I mean, I think for me, it's understanding that likely oil is going to go lower. I know it's stuck in the mid 70s, but if we do hit a recession and the global picture kind of gets worse too, then you're looking at oil demand dropping even in spite of what's going on with Russia and some of the other things out there. So that would be something to watch. I think gold and silver have really good 2023s. And then I think the stock market, again, 20, 25% down would not shock me on the stock market. My hope again for Bitcoin is that it should bottom, according to my calculations, in the first half of 2023. Maybe sub 10,000. And then I think it starts to become a very attractive asset. That's assuming we get regulation, which after FTX, I'd be shocked if we don't have a framework within a few months of regulation.